हाय लानज। लास्ट मैंने एक वीडियो बनाया था कि हाउ वी कैन सिलेक्ट अ मल्टीबैगर स्टॉक. In that, I have explained that whenever a stock is making a range breakout, a continuous a range bound movement was there in a particular sector, it's not related to any particular stock. If you look at now, across the sector, if you understand, there will be a shift. The government will be focusing in that particular sector, or there is a earning visibility in that particular sector, then we get a higher valuation. It's not that. And now, when a company, even if it is not growing, only government is focusing, we give a forward valuation. Maybe that company is going to get a valuation at this level after running this much EPS, say X EPS or 5x CPS. Even with a 2x CPS, market discount it and market give a very high P. And those stocks touches on a sky high. And at this moment, if you can further study and if you are taking a fresh entry, uh, let me tell you that if you are having a long term view, one more thing that long term is a very multiple time I shared in my on my some of my note or somewhere like on social handle or my page that see perspective input every decade is different. In 2008 19 I have seen, uh, though I was very young and that time I have started my investment, that time also people are talking about a solar, talking about a digital education, but it has not happened that time. And if you look at multiple Educom, Websol, many other businesses, so those stock has not performed for a long period. Even Websol has performed recently, last 1.5 years or 2 years. We have seen structural changes. They are doing some capex. All this thing has swelled up. Now, what is the point of our entry? If your point of entry is at a multi-year breakout high. Now you need to correlate that why this particular stock is giving a multi-year breakout. What are the changes in a particular sector? Whether it is this one, whether you take an example of Masdoc, yeah. So these are and does it mean that growth is over? Growth is not over. So further also it will grow. But that growth may again come after 2, 3 years. By that time, if you're holding this particular business with a zero return, you can definitely hold. It's your perspective. But if you are taking at this moment, this price or at this price zone, and if further slide is happening, you will be sitting in a loss. Investment is why we are doing investment to beat inflation, not for a fascination. Okay, this is a very good business. I will come and buy. This is not the way to actually look at. Unless you know that what phase you are buying. You may go wrong if you are going wrong, if company is not performing, but what stage you are taking. If you're taking at a peak period, already company has generated a 10x, 7x return. Don't touch. If any company has performed within a 3, 4 years span, see, this 100x stories, 20x, 50x stories will be there. You don't know that which are the stocks is going to generate a 100x. Unless you are being a monk, only you can select a FMCG company which may become, with irrespective of any consumption related story, whether it is a Asian Paint, it's a proxy to infra, it is also consumption based, or you take any other train, anything which is a consumption based story, it will go 5x, 10x, 20x, 100x over a period of time. And good management, capital, or they will grow their reserve. They will reinvest, their cash flow will be profited, they will distribute dividend, they will do a bonus share, split, multiple other things to reward you. Now, point is that if you don't know that which are those businesses as of now, definitely are defense related, railway related stocks are not those kind of businesses. Why? Because government is having a plan. Definitely this plan is not over yet. And this plan is going to, like, again, many order Mazda will get, all railway stock will get. Again, we will see. But whether those price has discounted on a chart, if you see a stock has moved already 4x, 5x, 10x, whatever, that time you should be very cautious that whether it is a hype, whether you are taking something at a top. Now you take an example of all PSU stocks. All PSU stocks has moved a lot. Post election, I have given a message that post election one should avoid all PSU stocks, any PSU stocks. Why? Because hype is over. Hype is happening because government is coming, new government is like the old government is coming, stable government. So all hype. So they are, and government is openly also saying so many things about stock movement. So it's got a P expansion. Now when it is falling, whether it is not visible to you, if you are getting, say, I have prepared, I guess. See, if you take an example from any PSU banks also, you will see that, one second, sorry, in all PSU banks already, it is at a, like it's a monthly chart. It has given a monthly breakout and it has given a, so these all are a stock which will, when they're forming in their phase, it may give a 1x, 2x return, and that already been generated. Again, the banking cycle is what? That bank will give loan again after 4 years. So bank will, there will be some default because most of the banks are giving loan for a 3, 4 years tenor, 4 years, 5 years, term loan you take. To take an example of any machinery equipment loan, mostly on an average it would be 4, 5 years. Whether it is a BK loan, apart from that, housing loan and business loan also, if you take, it's a hardly few infra projects are funded for 15 years. If it is getting default, then it is fine. So that you can go through on a con call if any large NPAs are there or not. But if banking stocks are performing and generating 1x, 2x return after a long period of non-performance, then your sense should be that you should book profit. You should book profit, irrespective of what others are saying, irrespective of anything. Because a banking stock is, again, I'm saying it is a cyclical business. 4 years they will perform, clean their balance sheet, then again they will disburse loan, they will grow, again those loan will get default. If you keep this in mind, no, it is very simple. The when to take. When banks are cleaning their balance sheet, just see, observe whether NPA is reducing, any strategical changes they have done, whether overall economy faces an uptrend. So those things, if you are looking at, you can easily pick bank at a early level. In 2022, I spoke about all banking stock, PSU banking stock. At the same time, post-election, I say that avoid all PSU because it's very obvious. The hype is over. The expansion is over. Then why should you will hold that? Now, these all are PSU stocks. In all PSU stock. Now, if you ask me that, come and explain our different topic. If you think that market structure, how to look at that, which are the business now, which will give you a correction indication that, okay, no, these are the market break. Always banking stock is a first indicator in a market. because it's a proxy to all industries. If all industries are growing, and already that 2 3 years phase is over, when they're cleaning their balance sheet 2021 onwards. So all these things changes are happening. And 2024 end we are at. So almost 3 years is over. So all banking stock, if you look at all PSU, IOC, so those has given a fantastic return. Also, they're giving dividend. Don't you think that this is the exact time? And if you are looking at a any kind of a business, no, look at their monthly RSI peak. Every stock, somewhere I have shared also that every stock is having their own RSI peak, own RSI pattern as well. If you consider that, I will not go in a general way that where like RSI, this is over bought zone, oversold zone. Those things I'm not going to tell. I consider every stock is different. Every RSI, yeah, definitely, it will in a overbought zone. So there will be RSI 85 means almost 85% people are thinking that they should buy. Then who will sell? So 85% people are coming as a buyer. It's a extreme greed, no? So that means that slowly that 85% people will shift towards buyer to sellers. More seller will come. So automatically, whenever stock goes on a monthly overrated zone, 80, 85, or if you look at a IP, those are the zone where one should book profit. Any of the stock. If you see there is no revenue visibility, again I'm saying it is not only chart. Fundamental, you'll have to read. You'll have to go to con calls. You'll have to understand whether company is going for a capex, whether they can do their earning will grow or not from a next quarter, or it will be muted. Yeah, no. See, this is the zone where one should book profit, irrespective of like in every stock is having their own pattern. If you look at their monthly peak pattern, so they'll be touching their peak zone, almost a peak zone they will touch, and that is the zone no where one should book profit. See here, it has almost touched in that zone, and slowly 85% people or 80% whatever it is coming. So that is why always look at from where it is taking a reversal. On a monthly chart, if it is taking a reversal, so then and then this is a zone to book profit. Instead of asking here and there, what should I do? There will be a zone, no? Find out when those stocks has lost traded up peak. Even after that, no, it has continuously gone up. So you need to correlate that with the fundamental. And whenever you see that, okay, fine, this peak is done. Maybe here you would have booked, it has gone to 440. If you're fine, if you're taking an entry, the way I said that you take entry at a multi-month breakout, multi-year range breakout, see that what changes are coming. Don't ask any individual, don't depend on any individual. Please come and read for me. That one has to do. If someone is saying you, that is his conviction, and you're maybe making money in a bull market, and and you have no idea, then you are just a slave of price. That if price is falling, then you'll have to ask somebody that what should I do? Should I take an entry? Why you have taken entry? Because of the company, the sector will grow. Now, if a company is getting a big P expansion, try to keep in mind that sector perform 3 4 years in a one direction when their performance comes. Either the performance stays more than 4 years forever, it will not be for any cases. So unless it is a consumption based stock like a as I said, Asian Paints or something. And that also will come on a saturation point because many competitor also will come. If you look at Asian Paints, their ratios and all, The data days are increasing. What does it is means that now earlier they are not giving any credit to anyone more than 40 days or 40, 30, 20, 30 days. Now they are bound to give. It is a first sign. Every how you look at a business. Come on, I'm just showing you. In Asian Paints is a leader. Now, if you come in this later days, earlier it was at 20, 30, 30 days. Now they are giving up 49, 50 days. This is exactly showing that they are losing their market share. As of now, they're ready to give credit for 50 days. How you analyze, no? Some of the only one point can say you where if you look at no 44, 2022 onwards, forget about 2020, 21, 22 onwards. If you come on a chart, also you will see last 5 years, no, it is in a same zone, same zone. That means for me, it is losing their market share because as of now, what they were not doing, when a company is growing and having a moat, they will not give data days. You cannot like standardize this thing across the company, but you need to understand this kind of a business where lot of distribution point of presence are there. If they are not giving much credit to their buyers, it means they have a moat. That is why. So those things are very important when you are looking at a businesses. As per my point of view, if you come on now, to go and check the RSI of all the charts that we where we should take an our entry. This is the zone to take entry. If you come and taking an entry, and if someone, anyone, any person is saying that go and buy, look at this transformer rectifier. It has gone up this much. Now, if you go even 900 to 1800, for you, you will be making 1x. No, find out the business which can grow in a 1x space and having a margin of safety. Instead of looking at a such stock, just open a chart or find that what is the return of last 3 years. If stock has given a 500% return, clearly avoid. If stock in a range, sector is again, like I feel that diagnostic center, hospital, this kind of a business, wealth management company, yeah, definitely the down cycle will come. Those will be the opportunity. Apart from water is a like something, no, you cannot like it's a limited resource and we require water. This kind of industry and recycling, industry waste, this kind of industry will grow. And other businesses approximately anything will grow, but those are no muted. Muted means some or other raw material price is influencing their profit and loss and top line. Now many companies are coming, many sectors are coming. People talk most of the time. I have seen people talk about a company. See, for me, understanding sector is more important. And yes, case to case basis. If I look at a particular company, I try to go and visit or try to understand from a primary market exactly what they are doing. I don't buy any story from anywhere. Yes, I miss multiple things, but I depend on my own analysis and I do my own due diligence. I don't, many businesses has moved. Maybe I have not identified those. I've not taken a right decision to make and find that what is happening in there. But I'm happy that whatever other things I was doing, no, because not to complete your own study, to meet a particular management, it takes lot of time. Cannot do no hundred of things. And based on your friends or somebody is saying, you cannot just simply buy unless you rely those people. Okay, I hope that this video will give you that how you can avoid if you look at businesses. So definitely, if you look at State Bank of India, this kind of businesses, no, this has given whether it is a State Bank of India you take or you take any other business, NMDC. So if you come on a NMDC, You will see that there are dips in our EPS. Obviously, any dips in EPS is coming means the dips in price. So first they got a PE expansion. Now, if they are not getting a right EPS on your table, then definitely they are going to lose their valuation. Just keep in mind, never buy a Dhoni at your 45 or Sachin at 50. Always do identify early at a 15, 20. You'll have to pay less, you'll have to study, you'll have to wait because that 15 years Sachin will not play like a 20 years Sachin maybe. But if you can identify a 20 years Sachin, fine, you identify, but don't enter in 45 years Sachin and expect the performance of a 15 years. My point is identify business early stage where it has not discovered and find that why it will grow, what are the potential, if government is focusing or the promoter is buying, they're developing something new and you are finding that EPS will grow. So based on your decision, you should take, and it will not be that promoters are buying at a wrong level. Promoter will be having some plan. If promoters are buying or range breakout, these are the thing. No, one should give a priority at this market at least. Don't go and chase which other stock has given a 400, 500% return. Avoid. It may grow 1x, but don't take fresh entry on that. And turnaround story may play out, but turnaround story is not for everyone. So they'll have to go through multiple drawdown on that. And maybe after a 1 year or something, those things will play out.